When the tide goes out of stocks, they fall. Hey, I'm Luke Downey. I am recapping our latest insights piece at MAPsignals.com. Don't follow the news, follow the big money. A lot of people are talking about the market. It's having trouble breaking out. It's because the tide is going out of stocks, and I'm going to show you exactly what I'm talking about. If you've been following our channel, you know that I've been talking about you should prepare for a summertime pullback, and that's based on history. We know that August is one of those seasonally weak months of the year, and right on cue, we're starting to see that in our data. Here is a look at our big money index, and for all the new people that are watching this, the big money index, it is tracking inflows and outflows out of the stock market. It's a super easy indicator that really can teach you about the health of the stock market. So historically, when the BMI is in this red area and it starts to fall, stocks come under pressure. The same thing happened here earlier this year, and now we're starting to see the same type of movements that's happening in August. So that is effectively the tide going out of stocks, and that's why a lot of names are having a lot of volatility. But let's keep going, because it's so important that you understand why the data is so powerful. Here, we're looking at the daily buys and sells. Green, that's happy. Those are the buys. Red, those are the sells, okay? Here is what is so important and why this video is so prescient. You can see that buys were very healthy going into July and early August. Then you start to see something. Buys, they started to just get less and less, right? So that's telling you that there are less aggressive buyers. More importantly, you see the red signals. Those are all of the stocks that are getting sold hard under the surface of the market. Selling is starting to increase. That is changing tides, right? It's a new phase of the market. It's called distribution. And you might be wondering, why are stocks under pressure? Well, one of the big things is the breakout in the 10-year yield. It's actually at 15-year highs, flirting with 4.3%. If you go all the way back to 2007, that's where we are. So clearly, when yields are lower, a lot of stocks participate in a rally. As yields go higher, stocks have to compete with juicy yields, right? Investors want to be compensated for the risk that they take. They're getting a decent amount of compensation with risk-free assets. But let's do one final chart to drive this all home. If you look at the buying and selling, you split it out by market cap, you start to see the waves of change. Here we've got small caps. The buys for this week was 58 versus sells of 121. Same thing happened in the mid cap range, 5 billion to 50 billion, double the sells. You see a little bit of a split type of action, but if you total them all up, sells outnumber buys by 2 to 1. So if you're wondering, why is my portfolio under pressure? This is why. It's not the news. It is just the flow of money. Guys, remember to do your own research. Hopefully you like this unique lens on the market. Make sure to like and subscribe to our YouTube channel. I'll see you next week.